Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, the market is holding up okay for a Monday. First Monday in like a month that we're not limit down or something like that. So we'll talk about the overnight moves in the market, what that means going forward here. So as far as individual movers, some big movers in the healthcare space. Abbott Labs jumped on Friday. Johnson & Johnson jumped this morning. We'll talk OMI as well. Our guest today is Gil Morales. He's the author of the Gilmo Report and the managing director of MoKa Investors. He will join the show at 8:35. In the meantime, Joel, what's the word here overnight?
I just want to apologize for being late today. I got stuck in traffic, and it was just really bad traffic. So that's not a very good excuse, is it?
No.
S&P futures up 9 sticks. We had a big old down open, and 24.45. We hit that. We bounced. We had a rip-roaring rally to 25.67.50, and now we're still green on the session, folks. So Mr. Market's not worried today. Really like to see follow through the pre-market high. The level for the week on the upside, it's going to be 26.50, folks. That was our high 2 weeks ago. And then on Friday on the Globex session, we got up to 26.34.50. We clear that area. Then we're on our way to the 50% retracement at the 2,800 level. Looking at crude, down $1.32. Crude did have a double bottom at 2080 area. Old support is now new resistance. Traded under $20 to $19.92. We haven't done that, and holy moly, I think it goes back to 2002 since crude has been under $20. Gold is winding up here, and it's going to make a move. It had the big drop, the big recovery. Can't clear 1,700 and won't break below 1,610. So that's your setup in the gold market. Triple D, how you doing? Wild day on Friday. That sell-off late in the day. I hope that didn't catch you off guard.
No. I mean, everything catches you off guard to a certain extent here. The volatility is still in this market. We know there's going to be whipsaw moves. I mean, putting it in perspective, we've had a nice rally. I mean, really, when you look at this thing, and we were talking about it on Friday's show, we've had a significant rally. Yeah, we had a nice pullback, a couple little pullbacks in there, and I did add a couple small positions, like small positions to the long-term investment portfolio. But really, when you look at it, it's kind of just a bounce in an overall big downtrend. So I don't think we're out of the woods here yet. I hope we can be out of the woods. And I hope, the markets can get back to, coming and starting a rally here again. But you just look at the potential news flow, same thing we talked about on Friday, and you look at, the cases that are going up significantly in the U.S., and you think some of these are going to end in deaths. Unfortunately, you got Fauci on the weekend saying there could be as many as 200 to 300,000 people die in the U.S. I agree with those numbers. I mean, you just do the math, and that math can add up. I mean, it's a mess still in Italy, so there's still a lot of things to worry about. With that being said, help is on the way. So you've got a real battle between the bulls and the bears. I mean, we've got some good news from Johnson & Johnson here this morning, some good news with Abbott Labs. Maybe we should start with individual stocks. Talk J&J and Abbott.
Yeah, let's do it. Start it out, Spencer.
All right, well, let's start with the news from Friday. This is from Abbott Labs. It was Friday, right? Yeah,
Friday.
Exactly what time?
Yep.
I know exactly what time.
It was Friday that they announced a molecular point of care test that can detect the coronavirus in as little as 5 minutes. That was Friday after the bell.
It was big. It's big news. I mean, big news for Abbott Labs. I'm going to tell you, the rally at 4 a.m. was absolutely ridiculous. So it's not like Abbott Labs is a penny stock. It's not like Abbott Labs is a small little company that this is going to make a huge impact on their EPS power.
No.
This all of a sudden just became the COVID play at 4 a.m. This thing traded up over $90 at 4 a.m. How high did we get, Joel?
You don't. Well, okay. I also want to know where
I
you
was
got it.
trading other stuff, so I wasn't paying attention, but it looks like the high here, 91.11.
I got 90.85.
91.11 is what it's showing there on the Zoom there that you're looking at. That's TradeStation.
Wow. Yeah, it's so messed up. Actually on TradeStation at 5 a.m. I see a 91.50 print.
So in any regard, it traded over $91 this morning. That basically traded it almost to an all-time high.
Crazy.
It almost traded to an all-time high. A stock with a market cap. What's the market cap of Abbott Labs? Do you have it in front of you, Spencer? It's a race if you don't.
No, but yeah, I'll race you.
All right, we're racing. I'm grabbing the market cap here right now. I don't have that information right in front of me, so I actually have to just go grab it here. And the market cap on Abbott Labs is $131 billion. That was at the close. So you're talking about a company up 25%. They slapped on another 30 billion worth of market cap for the 5-second test or the 5-minute test. That's ridiculous. It was a ridiculous move. Congratulations to whoever sold it at 5 a.m. I looked at it and actually thought about shorting it. But by the time I had looked at it, because I was trading other things, the thing was $87. And I was like, well, I just saw it over 90 a few minutes ago and I didn't get back to it. So I had thought about if it got up over 90 again, I would short it. It didn't get back up over there. And at least, not while I was paying attention to it. And then it came back off. But that's a ridiculous move. I have no position in Abbott Labs, freely talk about it here. I sold it out of the investment portfolio, believe it or not, just a few days ago, which I only had a partial position left in it. But with the rally that it had in the last 4 or 5 days, I thought it wise to start lightening up. And I sold at 77 in the investment portfolio, I believe, which was very close to Friday's high. I actually sold it on Friday at the open, 77.5 I would have got. And, you look at it here this morning, 82.5. The 90 was a gift. I don't think it's going back there. I mean, it's good news for everyone. This is good news for the whole picture of COVID in itself, that we're going to have a fast test. But the company wasn't worth 30 billion more at 5 a.m. than it was than it was on Friday. That's just irrational exuberance, as Alan Greenspan would say.
Did you get? You did play it on Friday though, right?
I did, and Joel, don't even. So I bought some
sorry.
Friday night on the news, and then I only got a small little piece, and it traded up $1.50 on it, and I was like, wow, that's good enough, and I sold it, and no, worth $1.50. So FIFO problems here, Alex, if you're listening on Twitter. He always says he got FIFO problems. I literally was one of the first people in that on that news. Who's trading at 7:30 on Friday night? Just me. And I sold it up in the 70s. I think I was able to get in just around scratch. And the thing went up $1.50, almost $2 Friday night. And I thought, well, that seems pretty fair valued. Little did I know that they were going to get major media attention for this. And obviously,
where do you think it opens? This be a little fun exercise here, because
I think it could open, and I think it could open where it is. I mean,
yeah.
Do I think I would buy it up here at 82? Hell no. I don't think it's worth. I think it's worth a little bit more than it was on Friday, but you got to think of the size of this company. Up 8 points on how many shares at 1.7 billion? Is it worth 12 billion more now? No, I don't think so.
It will be interesting to see where it opens in the book, because you had a lot of highs in the $82, $83 area, but we'll see. I mean, it's holding on here. I don't expect it to go back up, but I don't expect to give a lot back until it gets under $80. I think if I was, playing it, had anything short, I'd see what happens in 80, but you're right. This is way, way overdone. Scott, BDGE, thoughts on Peloton as a COVID play? I just want you to know.
We said it.
Yeah, I'm on a 4-day winning streak. I've been on Peloton 4 days in a row.
You're on your own Peloton, so not the stock.
Yeah, correct.
I bought the stock. Jason Rasnick came on the show on Friday, and he reiterated my thoughts that this could be a COVID play. I like the chart, and I think it is a COVID play. I don't think it's gotten anybody really mentioning it as a COVID play, but I believe it is. I'm long the stock just for a COVID play. I bought 3 stocks in my long-term portfolio, but Peloton was put with a little asterisk beside it because it was not going in there forever. I just stuck it in there so I didn't trade out of it, but I feel like this is a stock that could actually hold up if the market goes down. If the market starts to rally, the stock I think could rip. I do believe it is. I think it feels like a COVID play to me. So I like it. I'm long it. I'm going to hold on to it for a little bit here, but not married to the position.
I for traders in it, getting over 27. I see two highs, 27 and 27.38 back earlier in the month. So I think that'd be a really good hurdle to clear, get into the 28 handle. But good workouts, man. I'll tell you, I'm glad we bought it before the crisis. Before the crisis, it's a good thing. Good thing to do. All right, let's go back to our drug
Johnson,
plays.
yeah, Johnson Johnson is out this morning. They announced a coronavirus vaccine candidate. They anticipate the first batches of the vaccine could be available for emergency use authorization by early next year.
That's
This is
good
a normal.
news.
Okay, so this move feels more normal than the Abbott Labs. I mean, Abbott Labs has come back down to earth. I mean, when it was up 20% this morning, it was absolutely ridiculous. Again, you've got a huge company. Does this make a difference for the company? Sure, and it'll give them some press, and could be trading up on it. I feel like $5 isn't out of the realm of normal for Abbott Lab or for Johnson Johnson. But when Abbott was trading up 15 points this morning, that was ridiculous. So I'll say the Abbott Lab move was ridiculous. Johnson Johnson move a bit more justified, although I wouldn't be chasing.
Big move. Yeah,
It's a
big
big move
move
for a big stock.
We just made the high on the last bracket at 130.40. That's $1.30. So I don't know. There might be some people that bought it over the last 5-6 sessions. How low did we trade? We traded down to 109.16. So if anybody was cherry picking down there under between 110 and 120, here's a nice gift for you. Getting over and holding 130, I think things really open up for this stock. But we'll see. Like I said, it's a thick stock. There's probably some stock in the book, and if you're buying this one off the open, you want to see it go your way pretty quickly.
So I probably would fade the move, but I'm not
agree.
shorting it. If I had it, I'd probably sell it. I mean, I'm at this point. So I'm at the point where I look at this market. It's had a pretty good rally. I'm, and obviously, I did say, I bought the Peloton, so a little COVID play in there. I did buy a little piece of Microsoft, although that's like, I kind of just wanted the stock for the gaming aspects of it, and I feel like it isn't going to go away. It's not a COVID play, obviously. They got a lot of other businesses that are going to be impacted, but I can't just come in here and start buying every stock here because I feel like the market could still lag lower. I'm trying. I want to be bullish. I really want to be bullish. There are some reasons, the two main reasons to be bullish right now, if you're going to be bullish. The biggest is the Fed. Without the Fed, the market would be a lot lower. The Fed has helped the market tremendously. The other reason is a cure or a vaccine and, obviously increased testing. So you have a little bit of all of that this morning. I believe that is why the market is holding up. I think that's why, we were down significantly overnight. We obviously, bounced back, but we got Johnson Johnson, good news. They're working on that Sanofi/Regeneron drug. They're doing further trials. Regeneron's up here again. I mean, there's drug companies trying to cook up a cure or at least some drugs that help along with the symptoms. And obviously, they're trying to cook up a vaccine here too. Eventually, that stuff will come out. And that, the market can really rip on. So that's why I don't want to be, all 100% cash here. With that being said, just, the potential news flow here, I'm still scared of. And that's why I'm more apt to sell the rallies here as opposed to buy the dips.
And we're calming down. I think that's one thing we talked about. I've been talking about consistently, when the market calms down and consolidates and digests everything. And I think that's your average daily range or the 9-day average true range. It's down to 188, folks. It was not well over, but we were over 200. That's incorporating the overnight sessions here, and calming down is good for the month. It's just, let's have a nice steady environment and not have these huge ranges. So if we stay above 20, this low for the overnight low 24.45, I will stay bullish for the week. We break below that and I will turn bearish. But right now, 90 handles away from it at 25.31. So we had the lower open, the dip and dive, and then it came all the way back up. And you're you're up 7.25. That was a really weird close on Friday, Dennis.
Yeah, it was.
Yeah, very strange.
They hit the stocks pretty hard. There was a few sell imbalances. It wasn't anything drastic though, but they hit them pretty good. We've seen some wicked moves. We've talked about it. At 350, we're getting wicked moves off the imbalances. Wayne Dugan wrote up, what I was talking about on the show on Friday. Wayne Dugan at Benzinga, and you can read the article. We're seeing wicked moves at 350 because the floor brokers aren't down there, and the information. So imbalances, like we talked about on Friday, they start coming on the floor at 2 o'clock. The market gets all that information sent to them, electronically at 350. But the floor brokers that are down, they already have a feel. They're talking to the designated market makers. They can send that up. They kind of know where the imbalances are. I feel like, and I don't know, it doesn't seem like they have that feel because we're getting these real whipsaw moves at 350, like it's all new public information. So that's one downside to, I guess, not having the floor brokers down there and not having the designated market makers down there, is that we don't know where the closing imbalances are until 350, and that's when you get these whipsaw moves.
And also, what about, we talked about this on Friday. We got the end of the quarter here. Are these guys just, are they just sitting on a bunch of money they have to put into the market and slowly deploying it? I mean, that we talked about tomorrow's the end of the quarter. I mean, that, I don't know. So I don't know what.
Going to be some real moves the end of the quarter this time. Like, think about, how many implications there are here. First, you have money managers that, this quarter was absolutely horrible. There is some people out there that don't realize that their stock portfolio got whacked to the tune of 20+%. Believe me, there are some people that don't realize that. And they're going to look at their accounts when they get their quarterly statements and say, or even their monthly statements, and going to go, what the hell? So there could be some window dressing trying to help that out a little bit. So maybe, we do get a pop into the end of the quarter. I mean, if there's, anything the money managers can do, they will try to pop that up, in my opinion, do a little window dressing. But with that being said, there's so many other potential headlines. It's day to day. You're still day to day on the headlines. As the cases go up, it's bad news. But as we get closer to a cure, it's good news. So it's still a battle between the bulls and the bears. I do believe we will get a retest of those lows eventually, just because I think the news flow is going to be negative, which is why I'm not going all in here. I don't know. I'll probably nibble on some more stocks if we start to, get back down to the 230s, 240s on SPY. But you can't argue with the market right now. They're buying the dips. We dipped significantly overnight, and they bought it again. So there's definitely some people out there who want to be invested in this market. But if you look at the internals today, it's such an interesting day because I see the market SPY trading higher here. But I'm struggling to really find, what is the cows besides Abbott Labs, Johnson & Johnson, some pharmaceutical stocks, maybe some of your Walmart's up a buck. I mean, you look at oil. Oil is down significantly here this morning. You look at the airlines. The airlines are like on fire, like in a bad way here this morning. They're going straight down. We got Spirit Air down 13% this morning. We got Delta Air. I'll just take you through them. Down 6% here this morning. We got American Airlines down 7%. We got LUV down 6%. We got JetBlue trading down. It's down 6%. You got UAL trading down 8%. The airlines are all down significantly here this morning. And, same thing, you go to the casinos, they're all down big here this morning. So like the stocks that started all this, sell off in the first place are the ones really getting hit. The financials are getting hit pretty good this morning. I struggle to find the reason that the market is actually trading green here.
Excellent point. Just real quick here for someone asked about Nike, and Nike did have fundamental information last week. They did have earnings, had a nice pop, and right now, I mean, it's holding in there. I see it trading in the red. Yeah, it's holding in nicely. I'm not so much worried about the 86 high, or even that high from yesterday or Friday at 85.74. What I'd keep an eye on is that close from Thursday, 84.30. I think you gotta improve on that in a hurry, or else this thing could give things back. If you break the low of the gap day, 76.20, things pretty wide open on the downside. Gap fill at 72.66, and then your 4-day low was way down at 64. So it's holding in there. I just like to see it hold or make a new closing high in the move for Nike with fundamental information out last week.
Dennis, I've been thinking about that this morning too, and trying to figure out why we're up. And this is the best Monday we've had in weeks. And I didn't
because we're flat. We're basically flat. We're slightly we're up 5 points with fair value on the S&P.
Think about what kind of bad news you heard over the weekend. I didn't hear a lot.
It wasn't a lot of. No, it's true. I mean, when you look at the news flow, yeah, we have, the US, significantly more cases, but America kind of knew that was
Yes.
coming.
Right.
We have more deaths. Yes, we have some horrible
Right.
individual stories, and I feel so bad for people who are losing loved ones or losing people that they know. I mean, that's a horrible story as well. But we do have good news. The Abbott Labs is really good news. Johnson Johnson's good news. Like I said, Regeneron, Sanofi are trying their drug over there and taking trials over, and I believe they said to Spain, to Canada. They started trials in the US last week, and now they're expanding it into like 6 other countries. So they're trying. And that's all good news too. I think that's what's trying to help the market a little bit here. But when you still look at these underlying stocks, the oil stocks, or oil's down significantly here. I mean, I just went through this, but I'm looking at individual stocks here this morning. There are some stocks getting whacked. Boeing, which has been a source of strength for the market for the last 6 days, is down $10 here this morning. So I'm very surprised, to you day traders out there, that the SPY is trading flat right now. I'm not shorting it right now because I do see some stocks trading green, but I'm looking, I'm leaning that way. That if the imbalances aren't really indicating that we're going to open down significantly. If they were, it'd be a different story. But I see Boeing 166,000 to sell, but Boeing's already trading down. I see Abbott Labs with a huge 1.3 million to buy. We know why that is. We've already talked about it. But it's mixed to a certain extent. There are some stocks trading higher, but there are a lot of stocks really getting hit.
I feel like I should amend my comment. Obviously, it's still really, really bad out there. It's really bad in Spain and Italy. It's really bad in New York. These hospitals are like war zones, so it is still really bad. But it doesn't feel like we got any new like exponentially worse headlines over the weekend. And
I mean,
Trump,
Italy's rates, their case rates were kind of falling a little bit. They weren't, the numbers
Yeah.
are still going higher, but the rate of growth is starting to
Right.
slow, which is good
Right.
news. Maybe that means the mitigation tactics are starting to work.
And Trump and maybe Trump saying that the country's gonna be closed at least through the end of next month, through the end of April. Maybe people are holding on to that the end of April as a potential lifeline here.
Well, it's important. I mean, we've talked about this for a long time, and people, argue with me, but I'm firmly of the case that we need to stay closed until we get on top of this virus, or at least keeping some businesses, not the essential ones, but businesses that can shut down.
And now we're going to.
Yeah, we're trying. It seems like we're going too slow on that front of my. I'd like shut her down and then get rid of this virus as best we can and then reboot it. But everybody's I get it. You got the balancing act. It's tough to be a politician here right now. I mean, I've given Trump a lot of hate in the past. I've never been, a Trump real hater because, I've even said before that when I discussed, the whole trading tax thing, I said I would not vote Democrat because they're trying to put, Wall Street out of business, really. So, and we trade on Wall Street. But, obviously, I feel like the Trump administration dropped the ball. I've said that. I feel like they did drop the ball on being prepared. I think there's a lot of people with that opinion. With that being said, what other administrations done better, I don't know. But it would have been nice if we were more prepared because we talked about it on this show back in January. It looked scary in China. And Trump multiple times shrugged it off, saying, only 15 cases are going to be at 0 soon. I mean, that was an issue. Yes, they shut the borders. That was one thing he did right, at least, for planes coming directly from China. But it's still, I don't think there was enough done off the hop. And that's
I think there's blames on both sides of the aisle. I mean, I think federal government, so it's. But you know what? We gotta, the market's forward looking, and we're forward looking here, and I ain't running for office soon. I'll tell you that.
We're not politicians, so we can't tell you who's, we can't tell you how to do this job better. We're traders, and all we can trade is the information in front of us. The information in front of me says the news flow is going to be terrible in April. There's going to be a lot more people that die. There's going to be, businesses that are still obviously struggling to survive because of the shutdown. But with that being said, the hope is the cure and the hope is the Fed. Those are the two things the bulls are relying on here. And that's big hope. The Fed, we know, is going to defend this market. So maybe the Fed can continue to defend this market and, maybe the markets, hold up. That's still to be determined. But so I would be, if I had a lot of cash to work, I'd still be a buyer of pullbacks. Like I said, I bought a couple stocks. Here's what I've bought so far. And I was buying, back when we were, on that one pullback, that one day when we got down. What did we get down to 2 days ago? When we got down to 241 on the SPY, and then we pulled back again. I bought a little bit more on Friday. I bought 5 stocks, all half-size positions, not full-size positions. I bought Microsoft. I bought Peloton, which I already talked about because I feel there's a little bit of COVID play. That's not a full-time position. I'm going to, get out of that thing if it starts to turn. I also bought a little piece of Qualcomm. I bought a piece of Kroger. And Kroger, again, I think I talked about this one. The reason I bought Kroger was this thing has given back all its gains. It's got good support down here. And I don't think Kroger is going out of business here. I don't even think their sales, if anything, they're probably higher than they were. So there's a potential for Kroger to actually report better numbers because you know what? The grocery stores are still busy. So, and then what was the last one? Do you remember? Oh, I bought a little piece of Twitter, a little piece of Twitter. So I wanted it for a long time. And I bought it right here, like right around the low 25s. So I just bought that on Friday too, just a small piece. I know the advertising revenue is going to get whacked. So, but I've sold this thing up at $36 and I wanted to get some of it back. Oh, and I also bought some Activision Blizzard because of the gaming play. And that I'm actually up pretty good in already because I bought that on Thursday when the thing was in the 54s, I think. It got down to the 53s, but it's up in the 57 handle too. So you can see kind of what I've been doing. I've been buying stocks that I feel like aren't going to be impacted that bad if this, goes for a long time, with the exception of maybe Microsoft.
Yeah, go ahead, Spence.
I was going to just make a quick public service announcement to anyone trading or investing the XOP or XES ETFs today. No, your eyes do not deceive you. There's a 1-for-4 reverse split going into effect today for XOP and XES. So they're not actually up 200% or whatever. It's just a 1-for-4.
Yeah, it's important to let us know.
1-for-4 reverse split. It is the shares are still worth the same.
Always fun when they do these reverse splits and people are like, oh, I'm up so much money. Oh no, they took 75% of my shares away.
Also what you got to think about too is the jobs number on Friday. I mean, the market.
Yeah, but it's going to be that's going to be for last month. So.
And we got jobless claims, and obviously they shrugged off that bad news. So maybe these economic numbers, they're expecting them to be so bad that they actually might buy it, on that data too. This market has a lot of bad news priced in. Do not kid yourself. There's arguments and good bull arguments that we could, continue to rally from here. Some stocks are very cheap, but I'm hesitant to just go. Like I said, I picked up a few stocks, so I'm not, obviously when I'm start to buy some stuff, I'm not 100% confident that, that we're going to revisit those lows, or I wouldn't buy anything. So I just wanted to get a little tasters on a few stocks that I felt could hold up okay. I feel like Kroger, even if we revisit those lows, Kroger can sometimes even get a bounce in some of those. It can sometimes be defensive. So that's why, I'm picking on stocks that I feel like, are going to hold up okay, even if we do go revisit those.
That's a good point. Yeah, Kroger looks good. You got that little
lots of support.
Yeah, there's support there. And it's not only daily support. I mean, you've touched this level quite a few times. Also, that support area is just below where you had like former resistance. It had a real quiet period in November through February. Broke out, came back down to earth, and hey, you're in it. You're in the trade with Warren, right? So if you're in there with Mr. Buffett, you're probably going to do okay. Haven't heard much from him lately, though. Sure like to see what, he made some big purchases during the financial crisis. I sure like to see him step up to the plate. It'd be interesting that, he did the Goldman Sachs, he did the GE back then, he did the Bank of America. I think that would be another, huge vote of confidence for the market if Warren came in with something like that.
Yeah, you're right. He has been quiet. I've been expecting, kind of watching the headlines, kind of waiting, waiting because whatever stock he picks is going to get a significant pop. Not an Abbott Labs type pop, but that would not surprise me. Whatever stock he picks, if it's a smaller cap, that it move 5 or 7 or 10% on it. People are waiting to see what Warren is licking his chops on. Yep. So he's going to be active. He's looking at this market and looking for an opportunity, but maybe he's being cautious too.
All right, we got 4 minutes. We got 4 minutes until Gil Morales, veteran market trader, investor. But Spice just sent me an interesting message here. Let's take a look. We haven't really talked about these stocks.
What?
With people having more time at home, what about some of these home improvement stocks, right? And so let's take a look at Home Depot. I mean, that's off the low. If I was trying to buy it on the cheap, it's up today. I'd see if it could pull back, take some of that move back. But the other thing that would be negative about that would be like money, like, if like they're not working, yeah, they could do home improvement things, but do you want to be spending a lot of
Well,
money?
but also, how are they going to buy their supplies?
It's
Home
open,
Depot,
but there's a lot of construction crews that aren't operating here too. I
right?
mean,
That's a good point.
there's some essential ones. Obviously, your roof is leaking here. They'll probably get out there, fix your roof. But I know from my understanding, I know a lot of construction people around here that there's a lot of construction crews that are operating very small crews right now. So you got to expect the majority. Yes, you have home improvements people, individuals, but a lot of Home Depot Lowe's sales are going to be, and maybe even the majority, come from construction companies. So doing major construction. The home builders, we've seen what's happened to the home builders. KB Homes, Lennar, they've all been hit really, really hard. I mean, they say it's not impacting them as much yet, but I'm sure it's going to. When the wealth of the world falls, people are going to build less new homes. So, and obviously, if this lasts for a while, I got to think that it's going to impact them too. So I think that eventually finds its way down to Home Depot and Lowe's, which they're not at ground zero here. People are still going to do construction, but they're not safety trades. I'll tell you that.
Okay. I'm just looking at the charts and they've all had nice bumps. So I think it's just kind of with the market, can they hold on, or I would just figure 50% on all these if you're looking to pick it up on the cheap. Don't know if I could chase it here. I mean, if you feel like you're really missing out the boat on something, you could always deploy a little bit and then see if it comes back in lower. But if people aren't leaving their house, it's hard to go get supplies to do home improvement.
All right, 8:34. Let's bring on our guest
Let's bring Gil.
a few seconds early here. Gil Morales. He is the author of the Gilmo Report, also the managing director of MoKa Investors. I'll bring him on and unmute him. Gil, good morning.
Good morning. Can you hear me?
We can hear you. How's it going this morning?
There's my video. All right.
Look at that.
I'm using
we got
iPad
Gil on video. Hey, Gil. How you doing, buddy?
Owl traders.
How's it going, Gil? How are we
Pretty
hanging?
well, actually. I'm feeling very fat and happy because I just picked up about 50% on the downside, shorting the market starting at the end of February. But you could see it coming. I mean, it's like a train coming, and I was surprised at how many people were somewhat, or let's say, fairly oblivious. Now everybody wants to buy the bottom, but the bottom makes sense to me because essentially what you did on the S&P, if you look at a long-term chart, a weekly chart of the S&P or the Dow, you came right back on top of this long consolidation that occurred between early 2015 and the latter part of 2017. If you guys remember that market, that included the big flash crash of August 2015. And we basically came on top of that. So it's just a big choppy range. The market went nowhere. And so we came right on top of it on the Dow, got pretty close to the top of it on the S&P, and you bounced, but you were ready to bounce because once the financial cable TV channels start telling you we're officially in bear market territory, then you can start to figure that's where the first bounce is going to occur. And now at this point, if you look at the charts, the bounces don't really impress me. I mean, if you're good at catching falling knives, go for it, but really not my bailiwick. I get short, I make my money, I back away, and I'm watching how the bounce transpires here. And it looks to me like you could see the NASDAQ and the S&P rally up to their 200-day moving averages. So that's a 50% retracement. So that would offer some pretty decent, say, reaction rally type trades in individual stocks. I think you have to pick the right groups. I tend to favor the clouds and things that are related to the mass transition to the cloud that you're actually starting to see anyways. And that, of course, those are names like Zoom, Citrix Systems. I like DocuSign. I like RealPage. I like Coupa Software. I like Avalara. Several of those names in that space. But I think you do have to sort of investigate the names and decide whether these are going to see any significant increase in business. But the whole thing could long-term be good for the cloud, and also opening people up to the idea of using the cloud more. So I think the one thing about this COVID-19 crisis is it's going to change our behavior, not only now, but I think also going forward. So that's something to think about. So, so I'm sort of playing it. I'm sitting here. I'll play some longs if I think I can catch a good trade off the lows. I know The symbol is work, but it's Slack Technologies. I can figure out why they didn't want to use a symbol that was Slack, because it makes you think of a slacker. But Slack Technologies is one that I think is interesting here, and that one has actually doubled off the lows if you take a look at that. And if you're using undercut and rally long setups, because I can't catch a falling knife. I think it's foolish to do so. If you think you're that smart, then go for it, but I'm not. Okay, I need a reference point for support and for a selling guide, because I have to keep risks under control. That's what a good trader always does. So if you have no reference for minimizing your risk and controlling it, then you're asking for trouble. So I like an undercut and rally type of setup where you take a prior low in the pattern. It could be 3, 4, 5 weeks ago, maybe 3 months ago, and you buy it as it's coming back above that low, and then that becomes your selling guide. So you're able to keep risk very tight. And usually when you get to the lows of a strong down move like we've had, the rebound is very sharp. So if you catch that undercut and rally, you should immediately see it start to move higher, and it can work very well as a trade. Then the trick becomes, how much are you expecting to get out of the trade? So
we're on the line with Gil Morales of the Gilmo Report. Worked with Bill O'Neill at Investors Business Daily. What are the institutions doing? I mean, you talk about that. I mean, it was hard for the.
It's all machines. You got these hedge funds doing all kinds of funky stuff, and they all almost blew up. I know Millennium has come back thanks to the Fed. So to me, there's no traditional institutional accumulation like you used to see, like mutual funds. Oh, Bill O'Neill's work was based on this whole idea of mutual fund sponsorship, but it doesn't exist anymore. You just got these machines pushing things around. You got index funds, ETFs pushing things around. So I don't think you have that so much as a driver. And if you look at some of the data, I know Goldman's put out some studies that show last year, almost all of the net buying was done by stock buybacks by corporations. So now these corporations can't buy back their stocks. So you wonder what sort of dynamic that's going to put into any rally and how far it can go. I tend to think that we're going to chop around here. You can see the NASDAQ and the S&P go to the 50-day line, but I think this is going to turn out to be a big bear flag and we'll make a lower low. And it also seems like everybody's getting too positive here too fast. It reminds me of April 2000 when everybody thought we had a big V bottom. So, but again, I'm not going to go on my opinion because you know what they say about opinions. So I'm going to go with the technicals. Anyways.
Do you have a downside target? Downside target?
I have no targets. I mean, we hit the first target on top of the big consolidation that extended from early 2015 to late 2017. But, at this point, I'm just waiting to see how things roll over, and then we'll see if they roll over. Who knows? Maybe
what would turn you? There's people out there that think we're going right back to all-time highs, Gil. There are.
Well, I think right now, obviously, the path of least resistance has been on the upside, right? Because you're seeing everything rallying off the lows. And I see a lot of undercut and rally type setups. So we know short term, that's where the path of least resistance is. And as Jesse Livermore used to say, that's where you want to go. You don't want to go fight the trend, even if it's a short term one. So I think I'm bullish until it's not prudent to be bullish anymore. So I'll go long until I see if we can't get to the 50-day line on the S&P and the NASDAQ, then maybe I flip back to the short side more aggressively. That said, I think, like Dennis was pointing out, there's a huge amount of volatility in this market intraday. So if you're a day trader, you could probably have a lot of fun. It's a lot like 99. Everybody quit their jobs. Oh, wait, they already have quit their jobs. Oh, and you could become a day trader with all this volatility. So that's how I see it.
Gil, you mentioned a bunch of stocks at the top there. Are those all names that you would be buying here regardless of what the overall market's doing?
Let's just say I've been playing them off the lows. And at this point, I would be just inclined to see if they can hold support. Like some of these, you look at something like the DocuSign, it's hanging along its 50-day moving average, I think. Let me check that real quick. I think I'm right. Am I right on that, you guys? I got to pull up my little charting module here. Yeah, you look at something like this, it's hanging along the 50-day line. You had a pullback into the line on Friday. It looked like it was going to break it, but it got support slightly above average volume. So that sort of thing, this to me is an entry, and I can use a 50-day line as a selling guide and just bail out. So,
how about oil? Down $1.37, under $20.
It doesn't look good for oil. I would avoid oil. I don't see any impetus for an upside trend. If everybody starts going back to work and driving again, then maybe you could look at oil. But I think, I know a lot of people have been trying to buy oil stocks all the way down and for the last several months, and they've just been decimated. So I wouldn't even bother with that. Now, my indicator for that will be, driving here in LA, I can drive down the 405 freeway at 5 p.m. on a Friday night, which is usually just a parking lot. Now it's wide open. Reminds me of the old days when I first, I grew up in LA and just watched it turn into a big quagmire. So when I started seeing more cars on that freeway, then maybe I'll be interested in going long oil.
Unless there are a bunch of Teslas.
Yeah, I don't know. Electric cars don't really.
What about
haven't really
Tesla?
caught on.
Let's talk Tesla.
Tesla was actually, you could have bought that off the 200-day line because it had a bottom fishing pocket pivot. So that is a reasonable entry right there. You look at the pattern is exactly 1, 2, 3, 4, 5, 6, 7 days ago. And you had a bottom fishing pocket pivot off the lows there. And it popped and ran up to the 20-day line. Now it's backing down slightly with the volume declining, but still above average. But it looks to me like it's trying to consolidate that move off the lows. So I guess if it came closer to 10-day, the only problem with that, that's about 50 points lower. So I'm thinking that, I'd watch this one as it sets up because it could turn. So, and then another thing is if all the shorts start jumping, if you look at a lot of stocks, they've got pretty big short interest right now. I'm interested to see what the latest month-end numbers look like, and they won't be out for about another 4 or 5 days.
Gil, of all the stocks you mentioned earlier, Coupa, Slack, Zoom, there's a few more you mentioned. Citrix Systems, I believe. CrowdStrike.
CrowdStrike.
These are all long-term investments for you?
No, they're trades.
Okay.
I don't know. The word long-term to me is for silly investors because nothing is long-term. Eventually long-term becomes short-term and stocks top. I don't care whether Warren Buffett's buying them or whoever. And I would not pay attention to what Warren Buffett's buying, although, there's a lot of talk, well, what's Warren doing? He's not doing anything. And when he does something, we'll buy what he's buying. Why? Just look at the chart. Be a trader, assess things on your own and don't be a sheep. And the same thing with all these drug things. I know what's the one popping today?
Abbott Labs.
Abbott, yeah.
Crazy.
Right
Gil,
but
this got up to $91 at 4 a.m.
I saw it pre-open
91.
I got up this morning, but there's a short there.
For sure.
You could have shorted it there, but unfortunately I can't start trading until 4 a.m. my time. So, it's only been an hour and 45 minutes.
Well, you got to sleep too. You got to sleep sometime.
What sleep?
Oh, you don't need to sleep.
At my age, you don't need to sleep anymore.
We don't need to sleep.
I wake up after 5 hours of good sleep, and that's pretty much it for me. So then I just kick my wife for the rest of the morning. But, you got that Regeneron, Moderna, even Gilead. Look at the patterns. They get little pops, but what do those pops turn out to be? They're tactical shorts mostly. So I'm watching this Abbott this morning. It's now back to, 81.96 on the last pre-market trade. You got the 50-day at 83.07, the 200-day just above 84.
Yeah.
So I don't. And what is it? How much? Do you guys know how much it's going to add to the earnings? What is it? Is it the 5-minute?
Yeah, the 5-minute test. That's what I was saying. This morning they're pricing an extra $30 billion on Abbott Labs market cap. There's no way in the world it's putting that kind of money onto their earnings. Even on a multiple perspective here. So
right. So this might be.
They rallied to an all-time high. It was absolutely ridiculous.
Really? Yeah, that's right. You're right. Wow.
Not a lot of stocks making new all-time highs.
No, not very few. Other than Zoom, Citrix is trying to. Those also, I'd be careful with those because Ring Central is coming in with a video conferencing system that will replace the portion of their customer base that is using Zoom. I guess it's embedded in Ring Central's system. So there's going to be a lot of entrants because there are a lot of companies that have the capability. And as everybody migrates more to the cloud, I think you're going to see more entrants coming into that space. And I don't see that there are a lot of barriers to entry among those stocks. So Zoom could, run its course. I thought it was interesting. Do you guys see that on Friday? Goldman put a sell rating on the stock, but they raised their price target from $70 to $80. And the stock goes up to 160. I think it's trading 160 in the pre-open this morning. I think people didn't notice that there wasn't a 1 before that.
I've never been sure.
Go figure.
I don't know how to interpret those when you downgrade but raise your price target, or vice versa, upgrade but lower. I never understood how to interpret those notes. But speaking of the cloud here, I saw this from Microsoft over the weekend. Microsoft said that cloud services have seen a 775 increase in demand in the past few weeks, and they expect that their Microsoft Teams daily active users will top 44 million. And that's a direct competitor of Slack.
Right.
So just talking about how low the barriers to entry are for these types of services. So I would watch out for that as well.
Yeah, especially for
watch out for the
companies
big guns here.
for companies that already have an infrastructure set up like Microsoft and also a large installed customer base. So, so I think you'll see more of that. And I guess Slack is picking up a lot of business. They reported another 2.5 million users added over the last week, I guess. And that's the stock's going to break out this morning. It looks like it's got to get through 30, but we'll see. But that's one I've been playing, and actually on both sides, if it run when it broke down, I was short it. And then as it's been coming up, I've tried to short it. And then after a while, you start to realize where the line of least resistance is. And then I just flip and go long. So, to a lot of people, that's weird. But in my book, in this market, that's the only way to survive.
Gil, can you tell us one trade you've made over the past few weeks that you screwed up?
Let's see. I never screw up.
Nobody ever loses.
Screwed up. I thought I had traded. No, I'm trying to think. What did I screw up? I would say that I stick to my discipline. So if I screw up, if I make a trade and I have my risk managed, in other words, I know where my selling guide is and I get stopped out, I don't consider that a screw up. My trade went according to plan. Okay. And a lot of people need to understand that concept. When you get stopped out of a trade, if that's part of your plan and your risk management, then you didn't screw up. You just executed the trade as you had planned and you stuck to your plan. So I can't really say, I screwed up royally or anything. I'll take small 1-2% losses if I get stopped out, maybe 3 or 4, depending on how I'm playing the particular stock. But I don't consider that a screw up. So I think the screw up would have been trying to get long this market too early. And I know people who did with disastrous results. So you got to be careful. I mean, it's still not an easy market. It's very dangerous, and it may pay more to just hang out right now, just let things kind of play out, because you don't know if we're going to spend several weeks chopping back and forth, and that just turns out to be a bear flag, and we go lower. Just reference, I mean, this market, it's like 2008 in the sense that we have a financial crisis at the same time, but the velocity off the peak is very much like year 2000. So, and I remember people got too bullish. Even Bill O'Neill got bullish in June and started saying it was just like October 1963. I was like 3 years old at the time, I guess, so I don't remember that one, but that was what he was saying. He turned out to be wrong. So I remember John Bollinger too on the first break down in the V move in April. I'm trying to remember this in my head. And he came on CNBC and he said that was a classic V bottom and we had bottom. So even the best guys can be fooled, So you have to be careful. And that's why, I'm not so smart that I can't use stops. You have to have them. So even if you don't plan a trade with the stop, then you're a fool. Now, I'll mention one thing I like here. I'm long physical gold, but of course that's been a 20-year trade for me. I bought it when it was under 300. However, when I think we're going to get some upside thrust, I will use the GLD. And we had a buy signal on the GLD on Monday when it gapped back above the 200-day line. Now that type of setup is what I call a moving average undercut and rally. So it's basically a shakeout through moving average, fakes everyone out. As soon as it pops back above that moving average, I'll go long that. And I'll do that with the GLD or any stock as well. So that was one thing that worked pretty well. And I've handled that trade pretty well so far. But I would watch the GLD coming back into the 50-day line here. I think gold is going a fair bit higher if and when before it rolls over. So I don't know if it does. But there's a lot of crazy stuff going on out there right now. So, and I'm also starting a toilet paper ETF. I just want to let you guys know that. Symbol POOP. So
okay,
it's got high demand right now. So
okay, trying to think of a good pun related to NA. Oh wait, tell us about the liquidity of that fund.
Which one?
Tell us about Tell us about Poop's liquidity. Tell us about Poop's liquidity.
Together pretty well. It holds.
Okay, good. That's what I want to hear. That's what I want to hear.
And you got to watch out for the constipation.
That's okay.
Exactly. I mean, you can get carried away with it. Yes, we're
starting to get carried away.
Okay, Gil,
I bet consolidation. I bet consolidation.
Well, one more before I let you go. Someone in the chat's asking, Gil.
Talk to Dappy.
Gil, someone in the chat's asking.
We're getting Dappy here, so here we go.
Gil, one more for you. Chewy. Have you looked at Chewy in the past few weeks here? The online pet food delivery.
I have a dog named Chewy. That's kind of I'm Mexican American, and that's kind of a Mexican American nickname, Chewy. Anyways, Chewy, CHWY.
Yes.
My pet bird is long. It's like, that pattern looks pretty decent. Let's see here. It looks like what's up with this one? Is nobody can get food?
Well, you're not going to go to the pet
so
store, so you got to order your food online.
Ah, that's the deal. Okay.
Pets.com is working right now.
Yeah, I think you had to buy it off the 10-day line last Thursday, so I think you're probably a little bit late. Yeah, but it looks pretty good. I mean, even on the weekly chart, it looks like you're trying to break out. But look at that. Oh man, look at that V-shaped, that 2 weeks down and then 2 weeks up to new highs. I don't know. That's or not new highs, but higher highs. So that's pretty funky.
All right, Gil Morales is the author of the Gilmo Report and managing director of MoKa Investors. Gil, as always, we appreciate your time and your wisdom, and we'll talk soon.
Okay, take care, you guys.
All right,
Thanks,
bye, Gil.
Gil.
All right, 8:50. That's always fun to talk to Gil. He knows his stuff. 8:52 here. One name I wanted to hit on before I forgot was OMI. Dennis, you know the story. The CEO was on with Kramer on Friday. They're a hospital supply company. Talked about how they are expanding their production, although it could take a few months, and the stock has rallied hard off of that appearance.
I've got a position in it, so I'm going to limit my comments. That's an active trading position. Obviously, it's a big pop for the stock, so we'll let Joel go.
Let's see. Whew. I mean, that is a big old pop. Just let me look. You hit 363, and then you had about a 3-point move, $1.50. So $1.50 on that. 510, 520. Wow, but that's a couple bucks away. I don't know. This is a big move. Let's see if I can find something on the daily highs here. Let me go to the pre-market chart on this one just to see where we are at as far as the pre-market high. Always on this kind of play, if you're in it and you're in it on the long side, you want to see follow through the pre-market high. And that couple times it spiked up to the 750 area. You're trading there right now. So you hold 750. Oh man, there was even a double top at that area going back in December. So hold at 750. You got to look at 8. There's a pair of triple top at 775. So a lot of resistance there. But if you are buying this off the open, you want to see this thing just keep on going. You don't want to see a pullback.
All right, 8:54, about 5 minutes left in the show today. I do want to get your guys' thoughts on Microsoft here because I mentioned it with Gil.
I bought it. So, I mean, I bought this one. This was a stock that I've wanted in my portfolio for a long time. I bought a half size position saying I'll buy half now. And if this is in the retirement account, and if it pulls back to those lows, I'll maybe put in the other half. I believe this is a company that is going to get through this. I think I've been saying, and I've been preaching this for a week and a half, buying solid tech companies with a lot of cash and that are going to survive regardless of, prolonged shutdown. So this fits that description. I mean, their gaming business is probably doing still excellent here. Obviously, there's going to be some businesses that aren't doing as well. So it's not like a COVID play, but I think it's a good company. It's a nice pullback. It's a reasonable valuation. I mean, maybe not when you start to look where the earnings are going to be forward, but I nibbled on some Microsoft. Just nibbled though.
Didn't they like added, but don't they have a platform, like a Slack platform or something that they added like
Teams.
Yep.
I mean, Cisco too. We haven't talked about Cisco, but they have an excellent product that competes with Zoom. Cisco, what's their product called? Just taking.
I was on it last night.
WebEx, isn't it?
Yeah, I was on
it
last. I was on it last night. I kind of like Zoom better. Maybe it's.
I like Zoom better too. I own shares of Cisco though because valuation's cheap.
Okay. But. All right, 856. The market continues this climb, this wall of worry here. Up 2650. Very orderly. Just a rally. They're bumping. Pre-market high is 2567.50. Not much after that, folks. We got up into the 2600 handle briefly on Friday and also on Thursday. So we'll be keeping an eye on that. Dennis, do we have any imbalances pushing us higher?
It's the weak get weaker and the strong get stronger. So the stocks that have been the weakest in this market, which, we've talked about, the cruise lines, the airlines, the casinos, Boeing, those stocks are all getting slammed here again this morning. So despite the market having a really nice pop, those stocks are all down significantly, which we've already, which we were covering about 20 minutes ago. I mean, they're getting hit. The cruise lines, and maybe they're not getting bailed out. It doesn't sound like Trump's too keen on it. Look at Carnival Cruise down another 7%. So here's a day that the S&Ps are trading up 25 handles, and you've got, Carnival Cruise Lines down 7%. You're really seeing separation here now. The stocks that are holding up well today are your defensive stocks and your drug stocks. So your consumer products are doing very well here this morning. I know Procter & Gamble gets another upgrade. There's been upgrade city here for Procter & Gamble, I feel like, the last few days. Late to the party, in my opinion. I mean, now you're getting on some of these things that just feels like it's getting, back. These stocks are starting to get back near their highs. So Procter & Gamble gets upgraded by Jefferies here this morning. They also upgrade Kimberly-Clark, KMB, another consumer products company. So you kind of get what the trade, Jefferies is looking at there. They're looking at stuff that's probably still going to have a decent amount of sales in an environment that we could be on a prolonged shutdown. So I get it. But with that being said, if the market starts to roll over, they'll start to hit everything. So I think if you come in buying all these stocks now, like Clorox and Procter & Gamble, although Clorox is interesting. Stop and look at Clorox. I just brought that one up. That's interesting, Joel. What do you think of Clorox? I mean, you got ugly head and shoulders, but if you got above the neckline back at 180, it starts to look interesting again, and you see, it is a COVID play. It was a COVID play, at least. Maybe that's over. Maybe that ship has sailed, on these buying these consumer products as COVID plays, but that sure don't look that bad to me.
177.5 is really what you got to clear to get back into blast off mode here. You had a high at 177.44 on March 23rd. You went to 177.43 on Friday. Maybe a big seller perched here at that 177.5 level, maybe up to 178. Also, what you want to see, if this is a stock that's going to be continuing going higher, then I would expect it to, 50% retracement on this one. It went from 214 down to 161. So that's 39 and 14, 49. Basically a 50-point move. Add 25 of that. You want to get it right back into the 170, 185, 190 area and hold, and then go back up and test a high. So little rebound here. If it did take out that low at 165.22 for you longer term players, could get a quick revisit here at 160. But I know Lisa's been buying it, so it could take, it's so hard to get disinfected. She found some recipe to make her own disinfectant using some Clorox. So keeping the place clean and me in the house.
So minute left here. Just overall thoughts.
Yeah.
I would still be doing the same thing that I've been doing for weeks here, is selling the rips and buying the dips. I'm going to continue to play it that way because that is what has been working. So you look this morning, you're getting, a little bit of a pop. We get back up there near, Friday's highs. You got a double top up there. You probably find a little resistance here once again. I mean, you got a significant battle between the Bulls and the Bears. Nobody knows how this story, we obviously all hope it's going to end well, but nobody knows the timing of when this is going to end. We just know I think April is going to be ugly. So I'm still using the opportunity to lighten up on certain positions that I'm uncomfortable with. And obviously the stocks that I'm replacing them with, we can see the kind of stocks, that I'm looking that hold up well, like a Kroger. So, this is, with the investment hat on. The trading, I'm trading everything. I mean, I'm selling rips and buying dips, and that's what I'm going to continue to do because that is what is working.
Just short-term perspective here for the S&P. We are climbing up here near the pre-market high of 2567.50. Not much above there, folks. You could look at your daily charts and get into the 2600 handle. 2605 was Friday's high. Your high close of the rebound, 2608. And then I just mentioned above that, 2634 was your high for the week. And your 2-week high was 2650. So I think it's really important, for this market to continue this rally, get above 2600, close above 2600 today, and, clear that path up to the 50% retracement. And that comes at 2780 to 2800. The volatility is coming down here. So we have, we're building a base, it looks like. We're just keep an eye on the news flow. Hope it continues to find about cures and things like that and not about deaths.
All right, for a free 2-week trial and subsequent discount to Benzinga Pro, it's our real-time news platform. Click on the link in the description of this video on YouTube. You can also always catch the replay of this show on YouTube or catch our podcast on whatever podcast platform you prefer. Thanks to our guest today, Gil Morales. Thanks to all of you in both our chats, both on YouTube and our premarket.benzinga.com. You can always give us a call, 734-494-0246, or email us premarket@benzinga.com. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your day. Be safe out there. We'll be back with you at the close, 3:40 until 4 o'clock.